welcome mindsetters to Mindset Learn Extra Live. Today joining me, I'm joining Katleho and Martin for accounting. It will be a great lesson, I hope.
It will definitely.
Yes, guys, remember you can post your questions on Facebook, which is www.facebook.com/learnextra. Or you can simply go to our www.mindsetlearnextra.co.za/live for the show. Martin, are you ready for the show?
Yes, I'm ready for the show. Thank you, Tsepo.
Okay, yes, thank you. Katleho, and how are you?
I'm great, thanks, Sepo. I think today accounting is going to be spectacular because it is for grade 12s after all. And you guys need everything that you can get. So that is why we are here.
To all those accountants, I hope you're ready for this one. Martin,
Definitely.
over to you.
Thank you very much. And Mindsetters, today is a very, very special day because do you know what day it is?
What day?
Today is the last day of the month, so it's also the end of the financial year. So what we're going to be doing, any accountant, if you get a future career as an accountant, as a CA, as somebody that does the books for the business, this is typically going to be your very, very, very busy period because it is the end of the financial year. And also, yesterday, I'm sure you know about it, Mindsetters, yesterday was the national budget speech, where our Minister, Praveen Gordhan, he gave us some information about the national budget. I'm sure you all watched that, or quite sure you did.
Yes,
okay, so welcome, Mindsetters. What we're going to do today is a special section on company ledger accounts. Company ledger accounts are very important because you are going to need to use the ledger accounts and keep track of the company books. So I'm going to start off just by defining some of the concepts that we're going to be doing in this lesson. So the first thing that we're going to be doing, you need to be sure that you know a whole lot of different concepts that are related to company bookkeeping. So there are typically going to be 8 important ledger accounts in companies. I'm sure your teachers have done them with you in class, but we're going to revise them again today. Specifically, the most important one of all is the appropriation account. That appropriation account, Mindsetters, is one that you must learn very, very well because it's going to be useful to answer the questions on company ledgers, and you will also often use that appropriation account to answer all sorts of questions about company financial statements. So this is one that you have to learn very well. We're also going to discuss how to enter the various company transactions in our general ledger. So those are our objectives for this lesson. Now you'll see that we've uploaded on the website a whole lot of information. And I'm not going to go through every single concept that you must know today, but I'm just going to highlight some of the important ones here. They are on the website, and what I'd need you to do is make sure that you know what these concepts are, make sure you're able to identify them, make sure you're able to give information about them, because you could get asked them as theory questions. So you need to know your par value, the par value of a share, you need to know the share premium, and you need to importantly differentiate between the par value and the market value. Just a quick recap for you Mindsetters that maybe have forgotten. What would happen is that the par value is the original price at which the shares were issued. So back in the day when the company started, many months or many years ago, they would have issued the shares at the original par value. The market value is the price of the share today, and that specifically is going to relate to when you want to buy and sell shares as an investment. I'm sure Tsepo and Katleho, I think you'd know that shares are very, very good investments.
Yes,
Yes,
definitely.
Do you guys know that where we would buy and sell shares?
The JSE.
JSE, that's it, exactly
well
right.
Done, Sepo.
So Mindsetters, remember, on the JSE, that is our Johannesburg Securities Exchange, that is where somebody would buy and sell shares, okay? And what you would do is you would buy them at the market value. So please, Mindsetters, do not confuse the par value and the market value. The par value is the price of the share when the company originally started. But of course, things change, the company becomes profitable, and people want to buy the shares. So what's going to happen is we're going to sell them at the market value on the JSE. So please do not confuse the two. They are both important concepts, but they are used at different times. Okay, then what you need to do, I'm sure your textbooks have full detail about this, you need to know the various steps in forming a company. So you should just, let's say you want to start a company, you should know and understand what you would need to do to form that company, what legal procedures you need to go through, and in particular, you need to know about the Articles of Association and the Memorandum of Association. Please make sure that you study these things because you could get important theory questions. Just know what's included in the articles, know what's included in the memorandum. But that's something that you mindsetters can get out of your textbooks, so I'm not going to go through it today. Also, a very important thing in the company is that we are going to get paid dividends if we are the shareholders of the company. And please, mindsetters, make sure if you don't know it already, revise the difference between interim dividends and final dividends. Interim dividends are dividends that are paid during the course of the financial year, whereas final dividends are dividends that are declared at the end of the financial year, which are going to be paid at some time in the future. So let me just write this for you to remember. Interim dividends are paid during the financial year. Final dividends are declared at the end of the financial year. And then finally, another very important concept, we were talking about the national budget. So in the national budget, Minister Praveen Gordhan always explains where the government is going to get its tax from, what the tax rates are going to be, how much tax we as individuals are going to have to pay, how much tax companies are going to have to pay. So you need to be aware of the concept of tax. That is where our South African government gets its money from. And you need to be aware of the concept of provisional tax. That is something that's very important. A company is legally required to pay every 6 months an amount of provisional tax that is going to get forwarded to the South African Revenue Services. And that's going to be used to pay various things such as upkeep of our roads and so on and so forth. So please make sure that you understand the concept of provisional tax. Okay, now that I've gotten through these concepts, these are important. You need to be able to revise them. Let's have a look at the different company transactions. There are 8 important ledger accounts that a company can consist of. You would need to know all of them. So you need to know how to fill in the ordinary share capital account, the share premium account, the retained income account, and some of your textbooks will have a different name for it. It can be called the retained income account, or it can be called accumulated profits. Please be sure that when you see a question, sometimes it's going to say retained income, other times it's going to say accumulated profits. Please, mindsetters, be sure that you know that these two concepts are the same thing. Then, importantly, we've got ordinary share dividends, and we have shareholders for dividends. Please note one important thing about these. These two are quite easy to mix up because they look the same. Both of them have the word dividends in. One of them is ordinary share dividends. The other one is shareholders for dividends. Please note that ordinary share dividends includes both your paid dividends and your declared dividends. You'll remember the previous thing that I said about dividends is that your paid dividends are also known as your interim dividends. These are the dividends that the company is going to pay you during the financial year. The declared dividends are the ones that they are going to agree on at the end of the financial year, and these are the only ones that go in both ledger accounts, the ordinary share dividends account, as well as the shareholders for dividends account. So please note, only the paid ones go in ordinary share dividends, and both the declared ones go in ordinary share dividends as well as shareholders for dividends. Okay, our next account is SARS income tax. That's also a very important account, so you need to know this one. Please note that in this account we put our provisional tax. So during the year we are going to pay our provisional tax, and that is going to be recorded in our SARS income tax account. Provisional tax, remember, is an estimate of the tax that you are supposed to pay for the full financial year. So you will pay it every 6 months so that the government can get their money during the year. I don't know what you think about this, Tsepo, but if you were paid a salary, would you want to wait until the very end of the year to get all your money?
No way.
Every month. I want to spend it, you know.
Exactly.
Yes.
We want to spend it.
Yes.
Government wants to spend it as well. So what's going to happen is the government is going to ask for us as companies to give them their provisional tax on 2 occasions during the year so that they are able to get the money with which they're going to use to spend on all the things that the government does for us. Okay, so our provisional tax is going to be recorded in our SARS income tax account. Now, very importantly, you also need to know this income tax account. Again, these 2 accounts are sometimes confused. Okay? The income tax account, please note this is very important. We are only going to use the income tax account at the end of the financial year, which coincidentally is today. What's going to happen with this income tax account? We are going to include in there the real amount of tax that we are supposed to pay. So what's going to happen is that we are going to work out our profit on our income statement, and the government is going to charge tax on it, and right now the tax rate is 28% on companies. Usually in a question, mindsetters, they don't ask you to calculate 28%, because it's quite a bit harder to calculate 28% than it is to calculate 30%. So most of the questions that you will see in your matric syllabus are going to work on 30% tax rate. But please bear in mind that the real company tax rate in South Africa is currently 28%. So what we're going to include in here is the true and correct amount of tax that we are supposed to pay, and that is going to be coming from a SARS assessment. So you mindsetters are still at school, so you're quite lucky because you don't have to pay tax yet, you're not working. The only work you have to do is the homework that your teachers set you. But for those of us that are employed and for those of us that run companies, we have to pay tax at the end of each financial year. So what SARS is going to do is they are going to send us a tax assessment, and that is going to tell us how much tax we actually have to pay. And that is the amount that's going to be recorded in the income tax account. So please, mindsetters, if you haven't understood the difference between the 2 clearly yet, between SARS income tax and the income tax account, please make sure you go and revise this because it's a very, very important distinction. Okay, the last one, and this is probably the most important one, is the appropriation account. And I've made some notes here that you should learn this one very, very well. This appropriation account can be used in other questions. And what I've done here is I've put the format of this appropriation account on the big screen. Okay, so you'll see here I've got letters A, B, C, D, and E, and these letters relate to the various concepts that you need to know. So let's have a look at A. A is going to be the net profit before tax for the year. So that is the profit that this company has earned before tax has been subtracted. Okay, so we're going to get that from the income statement, and it's going to be the second last line of your income statement. This number here is the profit before tax. That profit is what the company has earned before the tax has been subtracted. Okay, the next item here, B, is what we call the retained income at the beginning of the year. Please remember, I've said it before, retained income is also known as accumulated profits. So this is what this company had at the beginning of the financial year. And that belongs to the shareholders. That money is money that the shareholders have earned from last year's profits. So that is going to be added on this side. So these 2 amounts on the credit side of the account are the 2 amounts that are going to be divided amongst the shareholders, and they're also going to pay tax out of that. Okay, so those are going to get put on the credit side of our appropriation account. What then happens is we pay out our income tax. So our income tax we're going to record as item C. Then we are going to include our ordinary share dividends, which is item D. And please note, this is important, those are your total dividends, both paid and declared. So this is the interim dividend that was paid during the year, and it is the final dividend that we declared at the end of the financial year. So you add those 2 together, and you close them off to the appropriation account as ordinary share dividends. Finally, what happens, you mindsetters are good at this, I'm sure, because you've learned it since grade 10, you would know how to balance out a ledger account. So what you usually are going to have to do is balance this ledger account out of the profit and the retained income that we started off in the year. We are going to pay our income tax and we're going to pay our dividends, and what's left over is the amount that we are going to retain for the next financial year, and that is going to be retained for purposes such as expansion. If you don't have money, you actually can't run a business. So usually this is going to be your balancing figure. So you will calculate this amount by balancing the ledger account. In a few minutes' time, we're going to do an example, but I think it's time for a break.
Yes, time for an ad break. I hope you guys, you getting the key concept very beautiful as I do. If you don't, simply remember, you should go to www.lanextra.co.za/live, and you can get your notes, your contents there, and everything that you need. Katla, what do you think about it?
Yeah, I think that's awesome. I think that you guys should start downloading your notes right now. See you just now.
Welcome back, Mindsetters. I'm still here with Martin and Kat. We're still doing a beautiful accounting, and we're dealing with the key concepts. If you don't, or you've just joined us, you can still go to Facebook and ask many questions. You are quite on Facebook, but I like the way you're supporting it, you're loving it, and yeah, everything is going well. Thank you, guys.
Over to you, Martin.
Okay, welcome back, Mindsetters. I hope you had a good break. What we're going to do now is we're going to go through a question. You will see that what we've done is we've prepared for you some information that appears on the website where we've got the transactions that are likely to be asked for you in these ledger accounts. And on the right-hand side, we've got the different general ledger entries. So we've listed a whole bunch of transactions here that you will see down the left-hand side. And on the right-hand side, we've always told you what needs to be debited and what needs to be credited. So this is some information that you can use, download it, print it out, and use it when you're studying and revising for your final exam. I don't think I need to go through this because I'm sure you've been taught this in class. So the best way to actually practice it is to look at an example question. So here's our first example question, and it's a question on the different company ledger accounts. You will see there that we are asked to use the information below to prepare the relevant ledger accounts of Mac.Trading Limited for the year ending 28th of February 2011. Okay, so when you see this, you should always be very aware when is your financial year end and when is the start of your financial year. So the first bit is usually very easy. It says here that we've got information relating to Mac.Trading Limited, and it tells us that we've got the balances on the 1st of March 2010. You would know that these balances are the balances at the start of our financial year. So we have accumulated profits of 82,000 Rand. I'm sure, Mindsetters, you remember what we said to you before the break. Accumulated profits is also called retained income. So don't get confused if you see something called accumulated profits if your textbook says retained income. Some textbooks mention retained income, others mention accumulated profits. They are the same thing. You might also see that sometimes the textbook relates to them as retained earnings. Don't get confused, they are all exactly the same concept. So we've got 82,000 in accumulated profits at the beginning of the financial year. We also have the account shareholders for dividends over here, which says 60,000 Rand. This 60,000 Rand, remember before the break I told you what the difference was between shareholders for dividends and ordinary share dividends. What this amount of 60,000 means, this is an amount that was owed to the shareholders for their dividends at the beginning of this financial year. In other words, on the 1st of March 2010. Next important thing is that we have a balance on the South African Revenue Services income tax account of 14,500 Rand. And this amount is a credit. That is very important, and the question must tell you whether it was a credit or a debit. If it was a credit, take a moment to think about it. Who owes who the money? Do we owe SARS the money, or does SARS owe us the money? If we are in credit, what that means is that SARS is a liability. In other words, we owe SARS the 14,500 Rand at the beginning of this financial year. Now, there's some other pieces of information that are important here, and you should always be aware of how many shares are in your business. So it says here that by the 28th of February 2011, McDot Trading Limited had issued 500,000 ordinary shares. Okay, so always have in the back of your mind how many shares are in this business, because this is going to be useful when calculating dividends. Because to calculate dividends, you need to know how many shares you have. We'll get to that in a few minutes' time. First thing I want us to do now, though, we're asked to prepare the different ledger accounts. So what we need to do is we need to open these balances. These are the balances that we are beginning with. So let's look at the answer sheet. We have here ordinary share capital. You would probably know, I'm sure you know this, but ordinary share capital is an owner's equity account. This is the share capital that the shareholders have invested in the business. So if we look back here, we would see that we've got balances on the 1st of March, including the following, and do you see that we have not been given the ordinary share capital balance? So the truth is we are probably going to have to work backwards in this question in order to calculate that. However, we have been given the balances on accumulated profits. We've also been given the balance on shareholders for dividends, and we've been given the balance on SARS income tax. So let's put those in. Accumulated profits, we know, is an owner's equity account. So if we are doing the accumulated profits at the beginning of the year, we would put this on the credit side, because that is the side where owner's equity goes. Shareholders for dividends is money that we owe the shareholders at the beginning of the financial year. So the truth is that this 60,000 Rand is a liability. And finally, the South African Revenue Services amount, they must tell you on which side of the account it goes. And can you see they've told us that it is a credit. Let us look back at the answer sheet. On the answer sheet, we have ordinary share capital, but we don't yet have enough information to fill that in. Next account is SARS income tax. Can you see that we've been given a balance of 14,500 Rand, and that is a credit? So what we should do is we should fill in, as always, our balance brought down. So I'm sure you know how to do that. It was given to us on the credit side. The balance brought down of 14,500 Rand. I'm sure you also know what date this is on. This was the beginning of our financial year. So if we look back, we'll see that these are the balances on the 1st of March 2010. I know that that's long ago, that's even before the World Cup, but the truth is that you're going to get questions from different years, so you need to know how to deal with everything. So what would happen is we would put here that this would be March the 1st, 2010. Okay, so we've already included our balance over there on the SARS income tax account. The next account that we have on the next page is the amount for ordinary share dividends, and we also have the amount for appropriation. I'm sure that you can see that in our question, we don't have any balances on those two accounts, so we're not going to fill in anything. Our final account that appears on the answer sheet is our shareholders for dividends account. We have been given that balance already. Do you remember? It was this 60,000 that appears over here. So what we will do is we will simply go to the account and we're going to write that information in. Please be aware that shareholders for dividends is a liability. If you're ever confused about this, just write little letters next to the account names on your answer sheet and make sure you can fill them in. That means that on March the 1st, 2010, we had a balance that was brought down of 60,000 Rand. In other words, we owed the shareholders 60,000 Rand for their dividends from the last financial year. Now, we've started opening the balances. What we now need to do is we need to have a look at some of the other information. Okay, firstly it says by the 28th of February, McDot Limited had issued 500,000 ordinary shares. So this is the 28th of February 2011. if you can see that date over there, I just had to erase this. This means that we've got the balance on our ordinary share capital account at the end of the year, because this is the 28th of February 2011, exactly 2 years ago. We're going to use this information later on. It also says that 100,000 of these shares were issued at a premium of 10 cents per share on the 3rd of January 2011, and it also tells us that all of the money was received. We're going to use that information a little bit later on. Now, let's have a look at the different transactions that happened during the year. Okay, so here's our first transaction. Our first transaction happened on the 31st of March 2011. It says that we paid the amount that was due to the SARS and to the shareholders. So what you need to do now is you need to look back at your ledger accounts. Let's look first at the SARS account. In my SARS account, I've got an amount here of 14,500 Rand that I owed the South African Revenue Services at the end of last year. Now, when I pay that back, what has to happen is money has to leave my bank account and I have to pay SARS what I owe them. So can you see that I owe them 14,500 Rand? If I pay that, how much must I pay? Therefore, if I owe you 14,500 Rand and I pay you in full, how much am I going to pay you?
Nothing else. You've paid me in full.
Pay you in
Yes,
full. I'm going to pay
yes.
you 14,500 Rand.
Yes.
You should always try to settle your debts. So what's going to happen here is I'm going to pay 14,500 Rand, and that's going to be my first entry. I'm going to pay SARS in full, the 14,500 Rand. And whenever I'm paying money, obviously it's going to come out of my CPJ, because the CPJ stands for Cash Payments Journal. So I would fill in here the CPJ, and the details that I'm going to write here are going to be bank. Okay, the bank is important because the money is leaving your bank account. Also, you must just be very, very sure that you get the date right. The date is the 31st of March 2010. So all we're going to do here is we're going to fill in, my pen would work, March 31st. So we have now paid back the South African Revenue Services the money that we owe them. There's a second part to this transaction. It tells us that we have paid the amount that was due to SARS, but it also tells us that we've paid the amount due to the shareholders. You may remember that I said earlier, the amount that's due to the shareholders is recorded in the shareholders for dividends account. So what we will do is we will go to our shareholders for dividends account, that's on the next page here, and you'll see there that we owed them 60,000 Rand. How much are we going to pay them? 60,000 Rand. So all you're doing is you're going to pay off these liabilities. So you would have 60,000 Rand over here. The date on which we did it was the 31st of March. And the details that we're going to write, if we pay it, where does the money come from? It comes from the bank. And of course, we also know which journal we use. Any time that we pay money out, we are going to do it in the CPJ. So right now we've done the first transaction. We paid the amount that was due to SARS, and we've paid the amount that was due to the shareholders. Okay, now here is the next transaction that's happening, September the 30th, 2010. What happened here is that we paid a provisional income tax payment of 53,500 Rand. Remember I explained earlier, the provisional tax amount is the amount that you pay on the profits that you think you're going to earn. So we're going to pay SARS 53,500 Rand. It's as if we are paying them their tax in advance. This is like a prepaid expense. The way we do it is very easy. We're going to go back to our SARS income tax account, which I have over here. And it's exactly the same entry as this one, where we're paying SARS out of the bank, except it's now going to be a different date, and it's going to be provisional tax instead of the tax that we owed them from last year. So if we look back at what the amount was, 53,500 Rand, the transaction should be very easy. I'm sure you all know how to do it. We would write here bank. The details would be CPJ because we are making a payment, and the amount would be our amount that we had here of 53,500 Rand. So whenever you're paying provisional tax, you include the 53,500 Rand, or whatever the amount is, on the debit side of SARS. It's as if you're paying them an expense in a prepaid way. The details, sorry, the last thing we have to do is just to include the date, which is going to be the 30th of September 2010. So just fill in here, September the 30th. On September the 30th, we did something else as well in the transaction. Second part of the transaction is this one here. We paid an interim dividend of 20,000 Rand to the shareholders. So the shareholders of our company received 20,000 Rand from us in the form of a dividend. We now need to record this. Do you remember what I said to you earlier about the difference between an interim dividend and a final dividend? An interim dividend is going to be paid now. It's going to be paid immediately. So we don't owe anybody anything. So what that means is that we are not going to use this shareholders for dividends account, which is this one over here, because remember I said to you that this account is only used for final dividends, which are which are liabilities for the company. Instead, what we're going to do is we're going to make this entry in a special account called ordinary share dividends, which keeps track of our paid dividends as well as our declared dividends. The amount that we paid was the amount of 20,000 Rand. So all we're going to do here, if we pay money, what happens to our bank account? Our bank account goes down. So you should know from your knowledge of assets and liabilities that if your bank account goes down, it's an asset that is decreasing. So your bank is going to be credited. What that means is that ordinary share dividends is going to be debited as the contra entry. So what would happen is we would just write on this side the amount of 20,000 Rand, and because we've paid it, remember here's the word paid, we have very definitely paid this amount because it tells us there right there. What we're going to do is the details that we're going to write are simply going to be bank, because the money is leaving our bank account, and obviously that would happen in the CPJ. And the date is going to be the very date that we have, which is September the 30th. Okay, so that was an introduction to some of the transactions. There are quite a few more. Maybe you can try them during the break, because I think it's time for another one.
I think
Yes,
so.
it's time for another one, unfortunately. Guys, I hope you're enjoying all the dividends and all the transactions. But before that, we have to go for an ad break. But before that, I'd like to thank you and compliment you on you guys helping each other on our Facebook page. That means a lot for you guys. And for now, let's take this 2-minute ad break. See you after this. Welcome back, guys, Mindsetters. I hope you are going to enjoy this one. I hope you're enjoying it as I do. We're doing dividends and things. I'm learning today. I didn't do accounting at school. Hey.
Neither did I, actually.
Oh, yeah.
Now we can learn something new.
Today I'm learning, but if you just joined us, unfortunately, still you can go to our website, which is www.learnextra.co.za. And you can get all the contents, you can get our schedules, our videos, even the exact same notes that we are using now. You can get them. Now, back to you, Martin.
Okay, thank you very much, Tsepo and Kat. We've basically done half of the transactions that have to be done. I'm sure that you have practiced some of them during the ad break, and I'm sure that you know what you're doing, but let's just check and confirm that what you've done is correct. Can you see that we've done the transactions up to the 30th of September, and our next transactions are happening on the 1st of December 2010. What happened on the 1st of December 2010 is that we made a second provisional tax payment of 57,000 Rand. This is exactly the same transaction as the first provisional tax payment of 53,500 Rand, which we made in September. So the procedure is going to be exactly the same. We are paying SARS some money that we owe, well, not what we owe them, but some money that we estimate we're going to have to pay them at the end of the year. So what's going to happen is we're going to pay SARS this 57,000 Rand, and the way to do that is very easy. You're going to make exactly the same transaction that you've made before in the SARS income tax account. Here it is. So what would happen, can you see this transaction on September the 30th is exactly the same as what's happening now. We are going to pay SARS an extra 57,000 Rand. and that's happening on December the 1st. What we will therefore do is our entry is going to be the same as the one above. We're going to put the date in of December the 1st. We're going to write the word bank over here because we are paying money from our bank account. We would record it in the CPJ, and the amount that we have to pay is 57,000 Rand. So far, we've paid SARS twice. We've paid them 53,500 Rand, and we've paid them 57,000 Rand. That is our provisional tax. That is what we think we owe SARS based on an estimate of the profits that we think we are likely to make. And those are our two provisional tax payments. Make sure you know how to record them because it's very easy marks. Just write the date, the bank, CPJ, and the amount that was paid. Now, if you look back at the information, it tells us that there were 100,000 new shares that were issued at a premium of 10 cents per share, and it tells us that all of the money was received by the shareholders. Now, I've noticed in the break that there was one piece of information that was missing from this question. I don't know if any mindsetters noticed it on Facebook.
No. They haven't said anything.
They haven't
yet.
said anything? Okay, maybe they were concentrating on doing the various other things.
Yes.
I left out a very important thing in this question. I did not tell you the par value of the share. It was just a typo on my part. So let us just assume, remember you're going to need the par value of the share to be able to answer the question. Let's just add this to the question that the shares have a par value of 2 Rand. Okay, so what that means is that the shares were sold originally at 2 Rand each when the company was first formed. What we're going to do now is use this information to reconstruct our ordinary share capital account. Remember, we haven't been able to make an entry in there yet. So if we look back here, it tells us that by the 28th of February 2011, this company, MacDot Trading Limited, had issued 500,000 ordinary shares. So this, remember, we said was at the end of the financial year. We are now going to have to work backwards to calculate the value at the beginning of the financial year. So remember, here is a very important calculation. If you want to know how many shares there are, you need to know that you would calculate the number of shares by taking your ordinary share capital, I'm just abbreviating as OSC because I don't have space on the board, and we're going to divide this by the par value, and that will tell you how many shares we have. I'm sure you know this formula already, but you can also rearrange the subject of the formula. So you see, if I want to get my ordinary share capital, what I will do is I will say that it's equal to the number of shares times by the par value. So what's happened now, can you see that we have at the end of the year issued 500,000 ordinary shares, and I've told you now that the par value should have been 2 Rand per share. So if we have to reconstruct our ordinary share capital account, do you see that we have been given the balance at the end of the year? We have been told that the shares that we had in issue at the end of the year, there were 500,000 ordinary shares. That is the number of shares that were issued. If we want to know what the ordinary share capital is, all that we're going to do is multiply it by the par value of 2 Rand. Therefore, what's 500,000 times 2?
500,000, 10,000, 12,000, I think.
No.
Yeah,
What?
10 million.
10 million.
Okay, so,
Oh,
sorry,
pardon
1
me,
million.
sorry.
So we're going to calculate it. Maybe
So
it's
just add a
sometimes a
few
good
extra
idea.
zeros there.
Add a few extra zeros there. Mindset is something that's important is to count your number of zeros correctly. So if you are in doubt, even if it looks like a simple calculation, what's 500,000 times by 2 Rand? It's 1 million, but make sure that you do it on a calculator. Okay, because you could just make a careless mistake like we've made now, and you could lose those marks. So what's going to happen now is we're going to take that 500,000 shares at 2 Rand each, and what would happen is that that is our value at the end of the year. So remember I said to you we didn't know what our balance at the beginning of the year was. We are now going to work backwards and calculate it. That was our balance on the 1st of March. But we do know that at the end of the financial year, this company had 5 million shares. Let me just find that information point. Sorry, this company had 500,000 ordinary shares in issue at a par value of R2. Take that 500,000 and multiply it by 2. This tells us that at the end of the year, we had 1 million shares in issue. So we know that the balance at the end of the year is going to be, if we have to include our balance brought down, we know that our balance brought down at the end of the year, in other words, on the 1st of March 2011, is going to be 1 million rand. So we can put that in already. But we also know something else. We also know that some extra shares were issued at a premium of 10 cents per share. So during the year, we issued an extra 100,000 shares. Please note that in this question, the premium is not important, because the premium is going to be recorded in a special account called share premium, and we're not doing that account right now. We're only doing the ordinary share capital account. So we see that some extra shares were issued. They were issued 100,000 shares were issued on the 3rd of January. New shares were sold. So what's going to happen, if I sell shares, what I actually do is I receive the money in the bank account. So there's an entry here in the CRJ where the company is receiving money for these extra shares. And that happened on the date that we had earlier. That was the 3rd of January. So let's write that in there. That was the 3rd of January. So the only piece of information that we know is that these shares, there were 100,000 of them that were issued. And we know that they were issued at a premium of 10 cents. That information has been put in, but it is not really relevant, because please note that in your ordinary share capital account, you only record the par value of the shares. You never record the premium. So you're going to record the par value of the shares. We know that the par value is R2 per share. We also know that we issued 100,000 new shares. So 100,000 times 2, again an easy calculation, that gives me 200,000. That is the extra money that I received this year from issuing the shares. So what I need to put in here is this 200,000. These are the extra shares that we issued. So we started off with the year with a balance that we don't know. We then issued some new shares at 200,000, and at the end of the year we had 1 million. This is now going to be easy to work backwards. If I added 200,000 to some number to get 1 million, what was that number? Mindsetters, I'm sure you know the answer to that question. It was 800,000 rand. And of course, in your test, or if you're doing this as an assignment, what you need to do is balance the account out correctly. So you would need to write the balance carried down over here, and that's the 1 million that we were left with at the end of the financial year. And you should be able to see that these two accounts balance out at 1 million. I'm sure you know how to balance accounts, Mindsetters, so I'm not going to explain how to do it, but this would also be on February the 28th at the end of the financial year. So we have now balanced and totaled our ordinary share capital account. Okay, let's look at the next transaction. This is now the important transaction that happens at the end of the year. Can you see that the date of these transactions is February the 28th, 2011? That is the end of our financial year. Two things are happening here. Sorry, in fact, there are three. First of all, we calculated our net income before tax, and that was 320,000. Secondly, our income tax is 30% for the year. And thirdly, we declared a final dividend of 10 cents per share. Now, Mindsetters, these transactions are very important because they are all going to help you draw up the appropriation account, which I'm just abbreviating like that. So let's go back to our answer sheet and look at this appropriation account. As I've said before, a very, very important account in company ledgers, and it's one that you need to know very well. I'm sure I don't need to tell you what goes in this ledger account, but let's just recap it quickly. On the right-hand side, we would have profit and loss. And this profit and loss is the profit that we've made for the financial year. We would also have the retained income at the beginning of the financial year. And the entries in this appropriation account are all the general journal. On the left-hand side, or on the debit side, we have three important entries. First of all, we have our income tax, Secondly, we have our ordinary share dividends. I'm just abbreviating that, but please note that you can't abbreviate in an exam. When you're writing the exam, please make sure you write it out in full. And right at the end, we have our retained income at the end of the financial year. So we need to put in the information that we know. Can you see that we've been given our profit? That is our net income before tax of 320,000 Rand. So we can immediately take that number and we can include it here as the net income before tax, 320,000. So when you see your net income before tax, please note that that is profit and loss. Also, very important, the appropriation account is always drawn up at the end of the financial year, so all of the dates are going to be February the 28th. Our next important thing is that we must now calculate our income tax. That's the second transaction. This is 30% for the year. 30% of what? It's going to be the 30% of our net profit. So I'm sure you all know how to do that calculation. What we would do is we would say 320,000 times by 30%, which is just going to be 30 divided by 100. So can you see that our income tax is 96,000 Rand? This 96,000 Rand must be recorded in two places. Firstly, we are going to record it as our income tax number here, 96,000 Rand. And what you must always remember, who must get our income tax? Do you know, Tsepo, who must get our income tax?
Poor people, people who can afford. Yeah,
right, and we're going to pay it over to the South African Revenue Services. So what's going to happen is this money must be paid over to our SARS. So what we will do simply is we will go back to our SARS account over here, which we've got, and now we're going to include the real amount of the tax that we should have paid, which is our 96,000 Rand, and that would be in our general journal, and that is the real income tax as per the tax assessment on February the 28th. Okay, I'm going to leave it to you mindsetters to balance this account out and see we have paid 53 and 57. We should have paid 96. See whether we owe SARS money or whether SARS owes us money, whether we have overpaid or underpaid our income tax for the year. Now, finally, what we need to still do is we need to include the end of the appropriation account. So the end of the appropriation account is our ordinary share dividends. What we need to do here is read the transaction. It says we declared a final dividend of 10 cents per share. You will know that at the end of the year, we had 500,000 ordinary shares. So it's not very difficult. All that we will do is we will calculate 10 cents times 500,000. Okay, I'm not going to show you on the calculator how to do it because we're almost out of time. But what we'll do, 10 cents times 500,000, I'm sure you can check me, the answer is 50,000. So we have declared a dividend of 50,000 Rand. And that dividend is going to have to go in our ordinary share dividends account. Okay, so what would happen, this is our dividend that was declared at 50,000, but because we're not paying it, we have to write shareholders for dividends over here. And that amount is going to come into our account, 50,000. Okay, we're almost out of time, mindsetters. See if you can work out what the retained income is at the end of the year. All we still need to do is include the retained income that we started with, which was the amount in our transactions, and see if you can balance this account out. We will try and post the answers for you and see if you can work out what the retained income is at the end of the financial year.
Yes.
So I think that's about all we have time for today.
Yeah, that is all about.
That is all. Thank you, guys. I hope you enjoyed the show as much as me and Kat did. And you can still fight the way you are doing on Facebook. We thank you for everything that you're doing for each other, guys. And unfortunately, good things do come to an end. From us and Mindsetters, we out. See you next time.
Bye, guys.
welcome mindsetters to Mindset Learn Extra Live. Today joining me, I'm joining Xtra and Martin for accounting. It will be a great lesson, I hope.
It will definitely.
Yes, guys, remember you can post your questions on Facebook, which is www.facebook.com/Learn Extra. Or you can simply go to our mindsetlearnextra.co.za/live for the show. Martin, are you ready for the show?
Yes, I'm ready for the show. Thank you, Tsepo.
Okay, yes, thank you. And how are you?
I'm great, thanks, Sepo. I think today accounting is going to be spectacular because it is for grade 12s after all. And you guys need everything that you can get. So that is why we are here.
To all those accountants, I hope you...
Concepts that we're going to be doing in this lesson. So the first thing that we're going to be doing, you need to be sure that you know a whole lot of different concepts that are related to company bookkeeping. So there are typically going to be 8 important ledger accounts in companies. I'm sure your teachers have done them with you in class, but we're going to revise them again today. Specifically, the most important one of all is the appropriation account. That appropriation account, mindsetters, is one that you must learn very, very well because it's going to be useful to answer the questions on company ledgers, and you will also often use that appropriation account to answer all sorts of questions about company financial statements. So this is one that you have to learn very well. We're also going to discuss how to enter the various company transactions in our general ledger. So those are our objectives for this lesson. Now you'll see that we've uploaded on the website is the price of the share today, and that specifically is going to relate to when you want to buy and sell shares as an investment. I'm sure Tsepo and Katlejo, I think you'd know that shares are very, very good investments.
Yes,
Yes,
definitely.
Do you guys know that where we would buy and sell shares?
The JSE.
JSE, that's it, exactly
well
right.
Done, Sepo.
So mindsetters, remember, on the JSE, that is our Johannesburg Securities Exchange, that is where somebody would buy and sell shares, okay? And what you would do is you would buy them at the market value. So please, mindsetters, do not confuse the par value and the market value. The par value is the price of the share when the company originally started. But of course, things change, the company becomes profitable, and people want to buy the shares. So what's going to happen is we're going to sell them at the market value on the JSE. So please do not confuse the two. A whole lot of information. And I'm not going to go through every single concept that you must know today, but I'm just going to highlight some of the important ones here. They are on the website, and what I need you to do is make sure that you know what these concepts are, make sure you're able to identify them, make sure you're able to give information about them, because you could get asked them as theory questions. So you need to know your par value, the par value of a share, you need to know the share premium, and you need to importantly differentiate between the par value and the market value. Just a quick recap for you mindsetters that maybe have forgotten. What would happen is that the par value is the original price at which the shares were issued. So back in the day when the company started, many months or many years ago, they would have issued the shares at the original par value. The market value...
You're ready for this one. Martin,
Definitely.
over to you.
Thank you very much. And mindsetters, today is a very, very special day because do you know what day it is?
What day?
Today is the last day of the month, so it's also the end of the financial year. So what we're going to be doing, any accountant, if you get a future career as an accountant, as a CA, as somebody that does the books for the business, this is typically going to be your very, very, very busy period because it is the end of the financial year. And also, yesterday, I'm sure you know about it, mindsetters, yesterday was the national budget speech, where our Minister Praveen Gordhan, he gave us some information about the national budget. I'm sure you all watched that, or quite sure you did.
Yes,
okay, so welcome, mindsetters. What we're going to do today is a special section on company ledger accounts. Company ledger accounts are very important because you are going to need to use the ledger accounts and keep track of the company books. So I'm going to start off just by defining some of the concepts